Welcome to the big show. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I am your host, Joshua David, and we are happy to have you with us today. Once again, as always, I have my great friend, my great pal, Al. How the heck are you doing today?
You know what? I am feeling really good. How about you, Josh?
I am doing fantastic as well. And Al, it's always great to be back helping our Retire Young family make better investing decisions. Al, and we are on a mission today. We are on a mission to improve financial literacy for all of our listeners. And here's the problem. A lot of people just don't understand how the financial markets work, how they function, the stock market, these other markets that we're going to talk about as well. They don't understand the futures market, the Forex market, and the options market. And that's what we're going to do today. We're going to explain those, talk about what they are, how they work, and how they function. But most off, how people can participate utilizing these multiple markets. So, Al, we had another crazy week last week. I mean, lots of volatility, some big down days, which is really good, some more up days. What is happening right now, and how can us as the average investor participate in these markets?
Well, you mentioned the big down days, that being a good thing. It is a good thing for some people, and for some people, it's one of those gut-wrenching things. But, we've talked over the last few weeks, Josh, we've talked about urgency. The need to if you're going to be involved in the financial markets, if you're going to take control of at least some of your financial assets, now is the time to do it. And the things that we've been talking about, we're seeing the impact of some of those things now. One of them is putting things off. We often find that people that come into the classes say, I just don't have the time to do it, or I didn't do it before because I didn't have the time.
Or I got to wait till I get my ducks in a row.
Yeah. Have you ever seen anybody walking with a whole bunch of ducks in a row following them?
Well, no, it's because they're always gone.
They never actually do that, do they? And let's be honest, if something is important enough, you're going to find the time to do it. And so it's up to you to decide if your financial well-being is important enough, to find that time that you can invest in your financial future. And then another thing is controlling and reacting with emotions. And unfortunately, as human beings, that's what happens to us. And we talk often about the importance of having a plan that controls those emotions. And then the other thing is, and I think people saw it this week when, especially in the technology area, where, let's be honest, some of those stocks just got hammered.
Yeah.
Tesla was down 21% in one
huge.
day.
That's one day.
That is one day.
But that's an opportunity for people that understand how to short.
Exactly. And number one, if you understand protection, how you can make sure that you control risk, that is one thing. But also, the market went down. The market goes down. The market comes up. And that's the flow that we're always going to see in it, which means that there are opportunities in different directions if you know how to take advantage of those opportunities.
So everybody understands that up markets, that's good. But down markets, a lot of people are afraid of that. What is that concept?
Well, it could be a bear market or a correction. And that's typically people are just conditioned to kind of ride that out. Just, hold on, buckle up and ride it out because the market's going to come back. And it always does. But it takes time. It takes time for it to come back. That's lost opportunity. And unfortunately, time is one of those things that is a decaying asset.
Cannot get that back.
You can't get it back. You don't get a do-over. So the two most important things.
That's
Number
like
one,
a pig's tail when you play NEA over.
You know what? I'm not even sure what that is, and I don't know that I want to know. But then the two most important things. Number one is developing a trading plan, and the second one is having the discipline to follow that plan. And then the two components of that plan should be a foundational strategy, something that you can use in any market condition, any market direction with any asset. And then the second is the choice of the asset, the right strategy to use in the right market condition. And that foundational strategy for our students is what we call core strategy. Why does that work? Well, listen, it's based on this. Virtually every significant price action or move is telegraphed by the banks and the institutions. Why is that important to know? Well, it's important to know not only why it happens, but when they don't really have to know why, but you have to know when and where it's going to happen. The institutional money, the smart money we call it, that's the pros, the companies like Goldman Sachs, people like Warren Buffett. They're not going to buy at the top or sell at the bottom. Only amateurs do that. So we want to strive to follow what the smart money is doing. And understand they're investing maybe tens of millions or hundreds of millions of dollars into a trade. and they can't do it all at one time. And because first of all, they got too much at risk if they're doing it at one time. And secondly, because of the large amounts that they're trading, they impact the relationship between supply and demand. And that's really the basis of what we talk about. Supply and demand is really what controls the price action in the markets. When there's more demand for something, in other words, more buying, price is going to go up. When there's more selling, price is going to go down. But it needs to happen in a large enough volume that it really moves the price of something. You and I can't do that individually.
Well, it takes millions and millions of dollars, even billions of dollars.
Yeah, well, just think about it. If a major firm, let's just say Goldman Sachs, wanted to put a position together in Apple stock, they're not going to buy 50 shares or 100 shares. They may buy 1 million shares, but it's enough to have a significant impact on the price. And the key then is to be able to identify when the institutions are doing that, not only when they're doing it, but again, we know that they're not placing all of their trade at one time. They almost always can't possibly get that full position covered in one trade. So we want to identify where the next movement is going to take place, the next action by these big players. That's where we want to be ready. That's what our core strategy does. And in the classes that we'll be talking about here, we show you how that core strategy works, how the markets function, and how our strategy adapts to that functioning of the market.
Well, yeah, you have to understand a strategy, and when you have a core strategy, you have a plan with that. Now, think about this. You were mentioning how the institutions kind of telegraph their moves and their buying and selling.
Right.
Well, they're leaving a footprint on a chart, and that is what that core strategy will help you identify, is where those banks and institutions are leaving that footprint, right? So, and I'll think about this. There's a lot of volatility in these markets right now, and sometimes it's scary for people, but you have to understand that's an opportunity. And a lot of people are just putting things off, like we mentioned earlier. They were waiting until they get their ducks in a row. Now is probably that best time to start to get into these markets, but really understand, Al, we got a big show coming up. We're going to continue this discussion on how these markets really function. But really, in this next segment, I want to get into how the smart money is creating income. We have a lot of listeners that want to understand how to generate more income and how the smart money is doing that. So let's discuss that. Hire Young Radio Show. We will be right back.